Hey guys, all right, Sam here with you. It's Thursday the 25th here. We're kind of midday, and I'm going to try and move pretty quickly here because I'm going to try and do 3 videos if I can for you guys per the polling here. Now, first up, I'm kind of doing this for a favor for a member that has been requesting some individual equities, and he never gets enough votes to win. So this is kind of an interesting story here. There's a few things to learn. Now, first I'd identify this is RPC Inc., right? I'm not familiar with them, but they're in the oil services industry. So I do this for a couple of reasons. One, I want you guys to see that the underlying asset does not matter, right? I've said it 1,000 times. Doesn't matter. They all trade the same way. So just randomly, here we go. So here's an oil services company. I know squat about them, nothing, right? So, but I don't need to, right? Which was kind of the point I'm trying to show you. So if you wanna, right? So I wouldn't necessarily make a long-term investment here without getting some insight. But so if we're considering something like this and you saw a chart pattern that you liked, well, you can just go over to Yahoo Finance, type the symbol in, get some insight into what the company's all about, and they've just had an earnings miss here, which is interesting. So the chart, I mean, there's some interesting things here. So I've got a 3-day chart on this. So, right, guys, I've said this enough times, right? Whenever we're looking at equities, it's daily and above, right? So if you really want to get a clear idea of the wave count. So I had to go to a 3-day here to get some perspective on this. So huge amount of volatility here. So we can just see we pump up, pump down, pump up, pump down. So this range that we're in here is pretty well established, as there's the resistance, and we've got pretty clear area where the demand kicks in. So I put that. So where are we here? So is this a pattern that's likely to continue? Well, 3rd time down here. So we'll look at it here. So you wouldn't just go, that wouldn't be enough for me to go, all right, shit, we're at supply. You can see on the volume profile here, we come down into this section here where we do not have market acceptance. It's rejected as it comes there. Here's where the market's fat and happy, right in the middle of it. We get up to these extremes, you're right, there's nothing up here. It's just thin air. Same idea down here. So this you gotta, with a wave count like this, you gotta back through the history and figure out where you are. So this can be it's easier sometimes to do this in log scale when you have this kind of a huge move here. So I'm gonna put it in log just to show you what I mean here, so we can get a better look as we get all the separation down here because the compression's up at the higher numbers. So I pretty solid here. So it's interesting. We're getting a series of extensions in the 5th, right? So this 1, 2, that's pretty solid here, and then even going all the way back here, right? So, all right, so we break the golden zone, but 2 holds it. So potentially there's your wave 2. We go, here's our shorthand for the 1618. So you can see the algo target got ticked here, but as to why, well, I can't really explain it. So probably something on a smaller degree. Looks like this might have been a 50 to kick to it. But my point being, we got to work through the count. Where is our first one? Well, I get a 1, 2, 3, 4 now because of the overlap here. So it's a diagonal. So I get a leading diagonal into my first one of the largest degree. Here's my 1. All right, so no problem so far. So then I'm looking, now I'm going to take it out of log scale just because it skews the numbers so much. So let me pull this here. So we've got an absolute low down here. We're going to go up to our wave 1 high proposed here at this wave 1 of the largest degree here. So we get a kind of a complex. It looks almost like it almost looks like it's 5 here, but it can't be. So we'd have to trade this as an ABC, or pardon me, ABC into an AB. It looks like you could dig a diagonal out of this. So it's not ideal here. Right, so a little sloppy here because it sure would be easy to go 1, 2, 3, 4, 5, right? But we can't have an impulse in our corrective wave. So a little bit of a force fit there. And granted, I am on a 3-day here, so I would imagine we can get the ABC. So you're trading it that this would be your B. There's your C, right? So again, I don't know that it's absolutely critical to us. Note the break of the golden zone here yet again. So as it went up, right, so any sell side algo would have been broken there, but we just kind of carry this through. We'll get to the hard right edge in a minute here. This is a good exercise to go through. So you're here, you're thinking 1, 2, A, B, C into this 2. We get this congestion here. Now, it's tempting to want to do this. Right? It's tempting to think, oh, it looks a lot like a triangle, but of course we cannot have a triangle in the second. So you got to just deal with that. You know, what do you do with it, right? So is the 2 ultimately over here, and we've got to work through some sort of a, right there. So you can't get a one wave in this, so you've got to play this as some sort of a diagonal, but we cannot have a triangle in the second. That's an Elliott rule, not a guideline. So oops, let me just take that off. Okay, so there we get 1. All right, you know, so I probably here in terms of practical application, I'd use the lowest pivot, trying to get an idea on that 4. Now note here we get an impulse if that's correctly identified. So with that as an impulse, I can take the absolute low. Remember, algo doesn't care about the Elliott count here. It's just going to use the dominant pivot. So swing low, swing high. It's about a 2, you know, well, shit, what do we? 5 cent front run on the target, and that just straight, you know, off we go. So again, there's the extension in the 5th. So 1, 2, 3, 4, big kicker in the 5. So where does that put us? Well, if you start to look at what follows here, so you wouldn't know, right? You wouldn't know where you were. You'd think 1, 2, 3. Obviously, right? You'd be thinking 1, 2, 3, we've got an impulse, but it just turns out, right, since we get, and of course now we're doing this analysis with the benefit of knowing what comes next, can't be the 3 because of what follows it. So as it's an impulse, the right process of elimination, what's left, right? So it's got to be a 1, 2. Now given this, we get this A, B, C. Note here how the structure here supports the market here is again. Just very, very technical trading. So we get it. Here's our 1, 2 of the next degree. Now it gets kind of interesting here. Look, now remember, I'm on a 3-day chart. So let me scrunch a little bit here so I can get this just right. So this is the larger degree 2 low, and I've gone 1, 2. So I'm going to pull off of the 2 low here into my 1. No, pardon me, wrote the wrong one. I want the fib expansion, so I'm going to take the length of the 1 projected from my 2. All right, so where's the high probability zone for the 3? Right between the 1618 and the 175. So at this point, that would be the logical place to where you'd be putting your 3rd. All right, so what happens? Well, we come down and we overlap the 1. So slightly, you know, disorienting to what your expectation that we're going into to an impulsive structure. So with the overlap, you got to look at that and go, well, okay, I don't have that anymore. So what have I got here? I'm going to have to do it this way: A, B, C into the 3rd, right? Because I've got a diagonal now. So I'm coming from. Well, so I had a diagonal into the first one, then I get an impulse into this one. Excuse me, ABC here. Now I've got to go diagonal again because of the overlap. But note here, right? So I know it gets a lot of stuff on the chart here from the get it right on there, from the 2 low to the 3 high. All right, what do? All right, so let me get this off here. All right, so here's the 2 low to the 3 high. What do? Boom, right to the golden zone. Right, what happens after that? All right, this again, guys, I just try and tell you, you don't have to know a bloody thing about this company. Most things. Just follow what the algos are doing. There it is, right? So I know zero about this company, right? But that's a trade we can all take, right? You don't have to know shit, right? So here we are, prior resistance. Got this structure here. So if I have even just a moderate familiarity with Elliott, I can probably put a count together here. Don't like the Elliott? No problem. I got a dominant swing to a dominant swing. What am I looking for? I'm looking for, if I can get it, the golden zone. Where do we go? Right? And how do we know it's an algo? Look at the reaction. Where do we come back? Fuck, it's unbelievable. Right back to the golden zone. Then where do we go? Right, this is a 3-day chart of a company I've never looked at before. Doesn't matter. Right? As I try and tell you guys, it does not matter. So all you guys that are just, You're so committed to crypto. That frustrates me. You guys won't open up because it's everywhere. It doesn't, right? It doesn't matter, right? Equities, indexes, futures, FX. Right? It's the same shit, guys. Same algorithms are in here. Same thing. Underlying does not matter. It doesn't. Right? If you're not making money in crypto, you expand your horizons, right? A chart is a chart. They all trade the same way. All right, not to get on a rant here, but so what do we, another golden zone. So what do we got here? So looking at the count, right? So we're not done here. So we look here and we go, okay, wait a minute. How could this, right? We got a perfect golden zone here. I went back to target. Well, here was the first target, right? Just, Jesus Christ, there it is again, right? So, oh my God, look at that. Okay, so guys, right? So again, right, there you go, right? I mean, over and over and over, it's the same thing. I've shown this, God, no, I probably close to 1,000 videos, probably shown this 2,500 times because it's in every chart I pull up multiple times, at least 2,500 times. I've shown you guys that. Right, just so the reason I wanted to do this is because here's just a randomly company I've never heard of. I don't know anything about it. Right, so it's zero doubt in my mind when I pulled it up what I was going to find in here. All the same, guys, all the same. All right, so let's go back to our Elliott count. Well, I've got a diagonal here, so the whole thing now is we've got a series of diagonals, right? So 1, 2, 3, 4. I'm overlapping, so something finishes here, but it's a diagonal. So this has got to be my 3. So I've got to have a series of A, B, C's. Well, I come down here. Now this gets a little tricky because you want to go 4, 5. Yet it doesn't quite work. So I think what we have here is an ABC into an XY. Oh shit! I mean, I suppose you could go ABC, right? Probably same difference. Right, essentially the same difference here. So where are we now? Now we're back to, okay, let's just make it drop dead simple. Prior areas of support. Now, you start to put all of that stuff together, we get a count here that makes sense, just out of curiosity. If we'd have anything here. Well, not bad. I'm probably not spot on there. Let me tighten that up. That's pretty damn close, right? So is that enough? Well, now we're getting closer to enough to support the idea there's a trade there. Let's dial that in. So even though that isn't, so we'd be trading this as a WXY, right? You still have a corner pocket here, right? So once you get the pivot, right, and it starts to move away from it, the assumption is these are the 3 pivots, right? As long as they hold, 80% probability of making the median line. What, you thought median lines weren't going to work in here now? Guys, all right, same stuff. So is that enough for a trade? Well, there's certainly a low risk entry here. I mean, you could, looking up here for range in terms of the upper end range. So what are we up there at? Let's call it 20, 26, 27. Sorry, every time you click. So call it 26, and down here we're at 950-ish. That's pretty sexy range. Right. So, and then, the other thing I think I showed you guys here, or maybe I didn't. All right. So here's the 2 low. So let me pull this off here, just so I can get that pivot. So if this is the 2 and this is my 3, all right. So where are we looking for it? Right on it. Okay. Let me pull this off. Okay. So another golden zone. So golden zone as we hit the median line. Yeah. Now, am I going to trade this? Probably not. I don't trade a lot of individual equities. Right? So it's not like I'm here saying, I'm jumping on this, right? It's just a matter of capital allocation. I don't have unlimited capital. So I've got my capital at work in other places. But for somebody who's interested in this sector and looking for technical setups, well, right. So they just had an earnings miss, right? So the market is down, but we're certainly at these prior areas of demand. So is there a trade there? Well, shit, why not, right? I mean, I'm sure she could be here. So the upper end of this range. Let's use let's use 25 and a quarter. So I might do it like this here. So using this pivot here, this structure, because that seems to be the low end of the range here, you might give it just a hair. So what do you get there? Almost 6 to 1. Right. So ideally, you'd want some sort of a positive news development to look for a spark there. But since you're down here at support, I mean, you could tighten it up even more. Now you got almost 10 to 1. Or if you don't want to risk getting stopped out because of the volatility, we got some stop hunting going on down here. He's traded with an option, right? So after that move, we know that calls are going to be reasonably priced, right? So the vol is high, but it's going to be higher in the puts after that move. So when was that pivot here? December of 17, right? So there's there's lots of creative spreads you could put together for an option trade there. Or if you wanted to, and you wanted to look to be holding this longer term, like perhaps our member is, here's an algo target up here, right? So we don't have to wonder why this is bouncing here, right? We know there's an algorithm that's kicked in there. That's its target. So why not use the algo target? What do we get there? There's 11 to 1. So you want to ride through the volatility, buy a slightly out of the money put here and long the stock, right? It starts to rally up here, sell some calls up here to pay for the put. I mean, there's lots, right, options open up all sorts of creative opportunities for you in terms of how you might structure a bullish trade. But, to keep it simple, right, and a note here after that, right, in an earnings miss, the put premium is going to be more expensive. So maybe you do a put spread here, so you'd buy an at the money, selling out of the money to reduce the cost of that insurance, and then just get long the stock, right? So except that insurance policy is going to affect your potential net gain. Of course, market gets up there, you could sell an out of the money call to cover your long equity position and then offset some of the loss on the put spread down here. So lots of things you could do with that. But I guess the broader point I just wanted to show you guys, not to beat a dead horse, but I'm telling guys, the underlying market, it doesn't matter. It doesn't matter. They all trade the same way. All right, not to get on a rant there, but there you go, right? So why not, right? Perfectly good, right? Don't like the risk, tighten it up a little more. Want to be positioned and not get stopped out here, use some options for it. All right, guys, back to you in a minute.